Well, let's bring in David Lefkowitz of UBS Global Wealth Management and Ayako Yoshika of Wealth Enhancement Group to talk a little bit about this. And David, I know you're, in terms of your formal S&P target, you don't necessarily envision too much upside from here. But which way do you think the market is leaning here?
Yeah, Mike. So, yeah, our formal target is 5,500 for year end, which obviously we're basically out. We do have an upside case of 57, but I would take the big picture here. And similar to Adam's comments, I just think the environment is still pretty favorable. We've got a durable growth environment. Things are maybe cooling off, but they're definitely not cratering. Still have excess demand for labor that's getting back into better balance. So durable growth, broadening profit growth within the large cap space. And I think the disinflation is still in train, so that opens up the potential for the Fed to cut rates. It's a pretty good environment, durable growth, Fed has your back, and then the AI story on top of it. So it's a favorable mix that's driven markets up until this point, and we think that favorable mix generally remains in place.
And to that point about the Fed perhaps having clearance to eventually ease, let's listen to what Jay Powell had to say, speaking to Sarah Eisen at the ECB forum today, about progress that has been seen on inflation.
We've made quite a bit of progress in bringing inflation back down toward target. While the labor market has remained strong and growth has continued, we want that process to continue. I think the last reading and the one before it in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path. We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy.
Yeah, they always seem to want to be more confident, but seem to be reassuring words, especially when he gave a nod later to the possibility of a further weakening in the labor market. And they don't want to allow that to get away from them. So maybe some focus on some of the softening economic numbers that we've had for a bit.
And when you when you look at the inflation numbers too, it's really housing and insurance that are sort of the last two areas that are standing pretty sticky. And we believe that as we go through the second half of this year and into next year, those will continue to sort of dissipate in terms of their strength and contribution to overall inflation. So I think that inflation path is set, and really it's more about the economy and the labor market, and is that going to soften sort of more so than the overall inflation numbers? So it's a little bit of a race, I think, in our opinion, in terms of which one is going to soften faster.
Right, and I guess that's been, if there's been moments when the market has expressed concern about this, it is when yields are going up, perhaps, and people aren't sure if the Fed's either going to make a mistake or the economy can handle it. So, as an investor, Aya, what are you advising in terms of a posture right now, in terms of playing offense or defense with regard to economic cyclicals?
Sure. So, I think going back to Adam's comments about small caps, again, they're correlated a little bit more to the path and expectation of interest rate cuts. And so we saw that in the fourth quarter of last year when, the expectation for interest rate cuts were growing, small caps really outperformed during that time frame. So if we continue to see that expectation continue and that Fed rate cuts are going to happen in the second half, I think small caps could be an area of some opportunity just because they are a little bit more interest rate sensitive. But because of that, they are a little bit lower in that quality spectrum. Large caps have continued to generate so much free cash flow and high quality names that have solid, healthy balance sheets that investors, I think, gravitate towards that large cap quality area.